Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpario Research and Analysis, and this is daily analytical report, where I will tell you what's going on the markets from both fundamental point of view and from the technical point of view. So let's start. Let me show you the first chart, or maybe as always we'll start calendar. Because today we are waiting for important data from United States. So today we will see what is the GDP. Actually, we're having loads of information from United States, sanctions for Russia and response from Russia about cutting the diplomatic stuff. Those sanctions that United States made on Russia recently, those new sanctions are also hitting European companies, so European Union is not very happy with that. So most probably we'll have a continuation of the story from the political point of view. We should have a clash between European Union and United States, actually between Angela Merkel and Donald Trump. So I guess that's just the beginning of the story, and it will definitely influence the markets. As for now, well, we're from the calendar, not talking about politics. We have GDP, and do not forget about Kashkari speaking in a little bit than 5 hours. So I guess that will be the first comment from FOMC member since the FOMC minutes that we had on Wednesday. As we do have Friday, let's see the calendar for the next week, that you will be ready for trading as early as on Monday. You'll know what you should expect. If, for example, it will be wise to leave your positions open for the weekend, for example, or what can you expect on the forthcoming week. So let me just adjust the filter here, just to filter out the most important news. We shouldn't be bothered about irrelevant events, just focus on that what is the most important. So as you can see on Monday, we start with CPI from Eurozone, important definitely for Euro. Also, I would be careful with Chinese data, Chinese PMIs. Tuesday, also eventful. As you can see, interest rate decision from Reserve Bank of Australia, and also rate statement as always. Then we have a GDP from Eurozone, and PMIs, ISM PMI from United States, also PCE from United States usually is influential too. On Wednesday, the main main event will be ECB meeting, data important for New Zealand dollar, unemployment rate, unemployment change. Also ADP employment change as always on Wednesday, when we do have non-farm payrolls on Friday. On Thursday, another rate decision, but this time from Bank of England, so definitely that will be a day of the British pound. And on Friday, as we saw ADP on Wednesday, you know that non-farm payrolls are coming, so it's a non-farm payroll week. All eyes shifted towards Friday, towards this data, and also monetary policy statement from Reserve Bank of Australia, and the same pack of data from the job market from the Canada, so also for the Canadian dollar. So as you can see from the calendar is pretty rich, is packed for the next week, so we shouldn't it shouldn't be a typical summer holidays week, but we should get some nice movements and the volatility should be a bit higher. Interesting thing happened yesterday during mid-session in America because you know that recently in the past few days, weeks, we are having a very low volatility on American stocks. And in this environment, it is very easy to get kind of a flash crash movement. And this is actually what happened yesterday. So Nasdaq, S&P 500 declined sharply in the matter of minutes. And nobody knew what's going on. I scanned the market for news, for the triggers of that downswing, but nobody knew what caused that, why was that. It all moved also to the currency market or to the commodity and to the commodities market. So this drop on American stock exchange was contagious, and currencies and commodities felt that as well, and nobody really knew what was that, why, and especially why it happened. In some instruments we recovered after that. On some instruments that was just a trigger for a reversal. But it shows us one thing, that when we do have such a low volatility on stock exchange, it's dangerous. It creates a chance for this. It creates a chance for a sharp reversal. Also, it's applicable. It happens when you have high volatility, which is when you have unusual high volatility on local tops. On local highs, it can be a local top. It can show us that it can be a local top, and I'm gonna show you actually two examples when this took place, and one when this maybe it's taking place right now. Apart from that, problems in politics in the United States, but I guess you got used to that. Trump's administration is not giving us a break from different news. Obamacare repeal is dead after John McCain went on a Democrats' side. So Republicans couldn't pass that. We're having problems with this speaker, new speaker. He told the journalists some maybe not crazy stuff, maybe not nasty stuff, but he told some words that shouldn't be told in that shouldn't have a place in diplomacy, and that journalists told everything to the public. So he has to worry right now, a little bit at least. So as you can see, we're having those constantly. We're having news stories from Capitol, from the White House. It's very interesting if you don't fall into it, but you're just a spectator. It's really entertaining. That's what I would say. So now we can take a look on the charts. Let me start a bit unusually with this chart. Do you know what's that? That's Bitcoin against American dollar. Why I do have an indicator? You know that I never have indicators here because I want to show you something. And I don't know if you find this chart similar to any other chart that you have in the memory. Because I do, and I will show you that. Look, we had a relatively low price of Bitcoin. and this year it became really popular. From $800 we went to $2,700. We're still very high, and look at those changes. Those changes were very small. Now those changes are absolutely huge. That's a weekly chart. This is ATR, average to range indicator, and as you can see here, it was associated with local tops. Can it be here? To help you with answering that question, I will show you gold from 2000 to 2011. It's also a weekly chart. Similar situation, so low price, heading higher, 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 and a steep upswing. And in gold, all those ATRs above average also were suggesting a reversal. Here, the end of the downtrend. Maybe not here. Maybe not exactly here. That's not the best example, but this one, as you can see, end of the downswing, start of the upswing, and here, end of the long-term trend. After this, the price declined sharply. Here also, ATR showed you end of the, well, at least stopped of the upswing, of the downswing, and start of a correction. But what I'm seeing here, whoa, here I want to do like that. This situation, for me, it's very similar. And I'm not telling you that there is a chance for a reversal on Bitcoin now, because apart from that, we don't have any relevant signs, but I would be just careful with buying in these conditions, especially that, you know, we have an old saying that when everybody start talking about that, and you start to get when you start to get advices from the media, for example, which were never associated to the finance world, and for example, Lifestyle magazine is writing about trading on gold or on Bitcoin, that's when you should get worried. Like, for example, here in 2011, everybody was talking about gold. Lifestyle magazines, even magazines which are newspapers, which never talked about investments. They were talking about buying gold, and that was the sign. And it's happening very often. That's why it's common on stock exchange. Advanced traders know that when that kind of media, that kind of persons, not usually associated with trading, investing, when they start talking about trading occasions, and they start talking about a hot topic for trading, that for them it's time to escape. It's time to close those positions and move somewhere else. That's what was happening on gold, and that's what's happening right now on Bitcoin. Everybody's talking about Bitcoin. You get newspapers, magazines, TV programs about Bitcoin, and usually that's when the crash happens. Okay, so I just would like to tell you to stay safe. I would like just to warn you about this possibility, which I'm seeing from ATR, from the history of gold, and from the old traders saying about what you should do when you see this kind of situation, right? Now let's move to the normal currencies, not cryptocurrencies. Maybe, well, there's a nice story on Swiss franc, which is, as you can see, on the highest level since this it was Thursday, I guess, when euro dollar, when Swiss franc removed the peg 120 with a euro. Actually, from that point we are only higher, and we just made new highs. This week was really successful. Well, traders are buying euro, selling Swiss franc, especially selling franc, because of the possibility of action from ECB later this year, when they will most probably cut QE. It will affect Swiss franc, and that is why the price is heading higher. But it's a nice story to tell. It's a nice story to see, but I don't see a trading occasion here. So just let me delete that. As you can see, yesterday this movement, you could also see that that's FOMC, that's a correction and the suspicious movement on stocks, but today we're coming back to the normal situation. So American dollar is getting weaker, is heading lower, bounced off the short-term downtrend line, had another one. I told you that as long as we stay below this thumb up sign, below this horizontal resistance, the sentiment is rather negative. So if we are here, let me switch the accounts and I will show you the situation on S&P 500, for example. This is this flash crash. Well, we can call it flash crash from yesterday, but the truth is that the volatility was just very low. As you can see, between those two lines, resistance and support, we just had 5 points. So finally they broke that support. Most probably stop loss orders were triggered as well. We went to the first local support, second one worked, but they should finish that like that. If we'll get GDP in line with expectations, if we'll get a huge surprise or a huge beat or a miss, that can complicate the situation a little bit. Okay, so watch out here. I wouldn't enter this right now, S&P 500, because I don't see any good trading opportunity here. DAX on the other way made new lows. As you can see, they are back below this line, or maybe we should be more accurate with that, and they are not. But the thing is that they are below the yellow resistance, the orange resistance here as well, and the sentiment here is now in the short term is negative. So we have problems of car makers in Germany, and we all know that German cars, that car producers in Germany is very huge industry and a large part of German economy, and they are having problems, which affects DAX. Also, we do have this influence of those sanctions on Russia, because the Germans, they want to do business with Russia, not fight with them like Americans. And we do have another influence, another factor influencing the weakness of DAX, which is strong euro. So again, Germany is top exporter in the world, one of the biggest exporters in the world. And if you have a strong currency, it's bad for export. If you have weak currency, it's good for export. And they would like to have a weak currency. That is why, for example, Greece entered Eurozone. You may think about euro whatever you want, but we all know that why countries like Greece, for example, entered the Eurozone. Just not to make euro too strong, because if euro was only like, for example, France, Germany, and I don't know, Austria, and let's say Norway, that Norway gets rid of Norwegian krone, those strong countries, strong economies, euro would be very, very strong currency, which would be bad for exports. So DAX is on a totally different situation. than S&P 500, and as long as we stay below the orange area, the sentiment is negative. And WTI, as you can see, we are on the highest levels is 1, 2, 3, 4, 5, 6, 7, 8 weeks. That's pretty successful for them. I thought they're gonna come here and bounce maybe, but no, they broke all important resistances. Upper line of the wedge, horizontal resistance, downtrend line, and this one. And that's actually a positive sign. So we do have a buy signal on oil. Whether I like it or not, whether I can understand it or not, but the thing is that when you're a trader, you don't argue with the price, you just trade what it is. And I'm a trader, I want to earn money on the market, not I prefer to earn money on the market, not to be right, and believe me, it's not always it does not always go in pair that you have right and you earn money. Sometimes you can be wrong and earn money, or sometimes you can be right and not earn money. Here I wasn't right because I thought that the price of the oil will decline, but fair enough, it can go up if I will see a good trading setup. Actually, this is nice trading setup to buy here, but I'm not up to that, especially on Friday. I won't open a position on Friday. But if you're a bull on oil and you believe in oil, you have a nice background from the technical point of view here. So technical analysis supports your bullish view here, if you ask me. If you ask for my opinion. And now currencies. Also British pound, as you can see, made new tops yesterday. After that they retraced, but this is this movement of a bit stronger dollar that was caused by this flash crash in US. So it caused a stronger dollar, so weaker currency, weaker commodities, and weaker stocks. Now we are trying to reverse that movement. As long as we stay above this black line, the sentiment on cable is definitely positive. Euro dollar also, this is this movement, and now they are recovering and they are pushing higher, so most probably we will end on high levels. We won't have any shooting star here. That's a positive candle, and that's very important that they are making this candle here because it's a resistance, and making such a candle here opens their way to this resistance, which is created by those supports. So we do have 200 pips there, and most probably buyers will make it. American dollar to Canadian dollar, that was a good one. Also FOMC drop yesterday, kind of a flash crash reversal, and now we are trying to correct that, but that's a good one. Especially this channel down formation, I'm admiring it because look, those two lines are parallel, right? I didn't make that. You just highlight it, copy, and you know it's parallel. And as you can see, it touches those supports, those highs exactly peep, peep, and those lows peep, 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 peep. Almost 99% accuracy, which, well, it shows me that technical analysis works. Well, I do know that for a long time, that's why I'm using that. But if you do not believe in technical analysis, just look how accurate this channel down formation is. At the end of it, we do have an inverse head and shoulder formation here, which is a reversal pattern. We broke the neckline here, that increased the momentum. We broke first horizontal resistance, it increased the momentum. We broke the upper line of this channel down formation, it increased the momentum, and now we're having a small correction. But in my opinion, getting there is just a matter of time that they will test this line. And is this line important? I would say yes, because it's a midterm downtrend line, and most probably we're gonna test that. What will happen next? Well, it depends from the price action, but that's good for a start. And that's good if the price would touch this level. American dollar to Swiss franc. Here you can see this strong reversal from the Swiss franc, initiated by the inverse head and shoulder formation, breakout of the neckline. Now we broke this resistance, and the short-term, mid-term sentiment is positive. We are above all important horizontal supports here, this one and this one. So it looks like the next scenario for this pair is going 190 pips higher. At least that's what the technical analysis is trying to tell me with those price movements. Australian dollar to American dollar. I told you yesterday that we will have, if we will have a bullish price action here, that will be a great occasion to buy. That's why I'm telling you to wait for the reaction, not to trust theoretical supports or resistances, because here it looked great because we had a correction equality movement and a horizontal support, but there was no bullish action. Action whatsoever, so that is why there was no occasion to buy. Now they are trying to come back above the support, but as you can see, there is no longer support here because it got destroyed here. So I don't think there is that traders do respect this level. If they don't respect this level, we just have to remove it from the chart. No point having that on the chart anymore because the price is not believing in that. What the price is believing at the moment is this trend line, probably. So if they don't want that, fair enough, they want this and maybe this. We'll see. If the price will continue to advance higher, we'll have to check Fibonacci's. British pound to Japanese yen, they are also decreasing. Well, maybe not exactly. As you can see in the closer look, this orange area is still respected even in the intraday movements. Support, support, support. After the breakout, it became a resistance, and also the neckline of this small inverse head and shoulder formation. After the breakout, it's a support. So in those intraday movements, we do have a buy signal, but it's too low time frame for me to trade. I prefer higher time frames, and in higher time frames, actually, I'm not seeing anything significant apart from this this flag here with resistance and support created also by this trend line. That's a flag. Flag is a trend continuation pattern. Trend is bullish, so in my opinion, we should get a bullish upswing here. American dollar to Mexican peso. FOMC, this flash crash on stocks. Actually, there is no trading signal here right now. Silver created a shooting star on that resistance that we are talking about for a long time. So a combination of three resistances, downtrend line, horizontal resistance here, and upper line of this wedge. And the price created a shooting star there. Right, if we will get a closer look here, depending from that black line actually, because depending how we will move it, if we will use, for example, this tail, we are having a battle for that line, and actually price. I'm sorry, let's do it like that. I think this way will be accurate because, as you can see, it respects this low and this low. So currently we are locked between important resistances here and important supports here. And soon we should get an answer what they want to do on silver. If they want to go down, which would be initiated with the breakout of the support, or they want to go up, which would happen after the breakout of this resistance. So if you want a good midterm trading occasion, good midterm trading signal on the silver, I think we are about to get one, maybe next week. And I will be carefully watching, observing silver, because we are about to get a nice trading signal here, I guess. We should get one soon. Breakout of the upper resistance should trigger a midterm buy signal, and breakout of the midterm support should trigger a midterm sell signal, in my opinion. Okay, thank you friends for watching this daily analytical report. Now we'll have a short break, half an hour, and after that we'll have live trading session. So I will show you my live trading account, which I'm using for trading, and I will show you my positions. So which positions I had opened, what positions I do have open. Now I have two positions, so I will explain you and I will tell you what do I want to do with them. Thanks very much, guys, and see you on in half an hour, and if not, see you on Tuesday. Bye.